Welcome back for another Retirement Defense download. Today, I wanted to talk about the difference between an exchange-traded fund and a mutual fund. Now, both are great investment types. They're both things to consider. Most people have them or have experienced investing in them in both your 401ks and IRAs, just as much as in the general investment account that you may have. But there is some differences between the two, even though they're very similar. On the basis that they both invest in a pool of investments, like a pool of stocks that are small companies, or a pool of stocks that are large companies, or a pool of stocks that make up a particular index. But that's kind of where the comparisons come to an end. A mutual fund that is a pool of stocks that follows the S&P 500, for example, has 500 stocks that it is ultimately managing. And the manager of that mutual fund is going to buy and sell and give direction on how much of a particular position that they should have of those underlying 500 stocks. Because of that, there are increased fees and trading costs and transaction costs, and so the expense ratio or the cost of that particular mutual fund will vary greatly. The other part of a mutual fund is a mutual fund only trades once a day based upon how much people are buying or selling of that particular fund. That once a day occurs at the end of the day. Now, an exchange traded fund, on the other hand, is a more passively invested fund. It may have the same type of underlying investments. It could be a pool of small cap or large cap or a particular index of funds like an S&P 500. But it has a passive approach. It's not actively managed like a mutual fund, so the underlying cost of that is typically less. There's a certain philosophy that exchange-traded fund will have, and that manager of that particular fund just kind of sets it and lets it do its thing, with more quarterly or annual adjustments as needed. So the internal costs, expense ratio of the exchange-traded fund is typically quite a bit less than that of the mutual fund as its counterpart. Now, beyond that, the mutual fund, where it only trades once a day, the exchange-traded fund trades just like a stock. It buy and sell at every second of the particular day. So these are key differences between them, and when it comes to investing, we always want to look at how each particular type of investment works and fits into your individual portfolio. So if you have other questions about the differences between mutual funds and exchange-traded funds, or you want to take a look at your particular investment plan and your part of your portfolio, let us know. And otherwise, I appreciate you checking out this Retirement Defense download.